Interestingly, a couple factoids. So
Eh,
we're down about 10% in the last month. And why does all this matter at all? Well, it's because I declared a while ago that Tuesday, which was my birthday, not that I want to keep harping on that, but that's what I declared, that it was going to be my birthday present, that crypto summer would arrive, that we'd get the crypto equinox. I think I might be early. Maybe it's June 15th. At June 15th was the spring equinox last year. Maybe it's me June 15th this year, so maybe I'm a little early. But the really interesting factoid is Bitcoin's dead flat over the last 12 months. That's pretty interesting.
Hey guys, welcome back to Library of Wealth. Today we have Mark Yusko giving us the recent market fluctuations in crypto, highlighting a remarkable 10% decline recently. However, what truly grabbed his attention was the massive influx of people embracing Bitcoin as a means to break free from traditional banks and their associated risks. Yusko attributes Bitcoin's recent surge to short covering, while also acknowledging the genuine demand stemming from notable buyers like MicroStrategy's Michael Saylor. He's also noticed an intriguing inverse pattern for Bitcoin, one that is setting the stage for a massive rally in the second half of the year. Yusko raises concerns about a potential banking crisis in 2023, hinting at a possible deliberate strategy to instill fear and pave the path for central bank digital currencies. Let's get right into the latest interview with Mark Yusko. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
And it's because it fell from 60 down to 27 or whatever. And then it was kind of flattish. And then it had the 15, down to 15 during the FTX debacle. And if you look at the chart, it's like a beautiful inverse head and shoulders at 27,000.
yeah.
And so it's a really interesting technical pattern. And, I think we need some good news to get the momentum going. On the margin, pun intended, on the margin, there are a few that said, whoa, banks are less safe. I need to be my own bank. And there was literally some demand for BTC. I think much of the big move this year was short covering, right? So you had the big Binance short liquidation early in February, March. You had more short covering around some kind of news around the liquidation of the Mt. Gox stuff that actually didn't happen. But then you had some real demand, right? I mean, MicroStrategy,
Yeah.
Michael Saylor was out buying, and that was real. But I do think, and actually the topic of my presentation later today is about the banking crisis of 23. And I go back throughout history of the banking crisis from the 1800s to the 1900s. And what's interesting is if you would have said, we're going to have 3 of the largest bank failures in history this year, which was not on anyone's bingo card, by the way. If you would have said that this would be the largest year for bank failures in history. Now, part of that's inflation adjustments, but even inflation adjusted, it was bigger than 2008. Because what people forget is 2008, it was really just WAMU. And then there were a bunch of smaller banks in 9, 10, 11 that failed. So there could be another wave of failures going on. And we've seen that with PacWest and Western Alliance and things like that. But if you would have said that was going to happen, you would have thought, oh my God, Bitcoin's going to crash. Instead, it's up meaningfully. And I do think there's information content there. And look, I come back to the whole thing that all of this, I think, is a plan to foment fear in the banking system so that we'll all gladly, happily accept the CBDC that's coming. And look, this is back to your point on circus. This is the bread and circuses thing. If you can get a couple things that people care about to be cheap and you can entertain them, they won't pay attention to the reality that's going on around them. They won't pay attention to the fact that they're stuck in, these slavish jobs and barely getting by and have low quality of life. I mean, if you can entertain them, which is what MSM, mainstream media has turned into. And I don't know, your word, right? I'm saddened by this.
I'm saddened by it.
It's very sad to watch again, I call it systematic, fully planned, like surgical strike against the human psyche. And it just channels money to the tippy top of that, all-seeing eye pyramid. And the fact that there aren't like more threats of riot is kind of weird. I think what you got here on the right is the broad dollar index, the one against real currencies, emerging market currencies. Usually the one everyone talks about is DXY, and that's really just the yen and the euro and the dollar. This broader one has a lot of emerging market currencies, and I think the emerging markets are struggling again, right? I mean, I think they are feeling the effect of the fact that Powell, despite all the protestations to the contrary, didn't pivot, didn't pause. He just raised interest. Now he only raised 25 basis points, but he raised, right? And a lot of countries that have denominated their debt in dollars are feeling the pain in these emerging markets. Yeah. And you got, I think this is a little bit, Argentina, inflation's up over 100%. Brazil, it was creeping up again. Turkey, crazy numbers. So I think that's what you're seeing in this TWI number, but I could be wrong. The lag effects are so real. And if you go back to that other chart for a second, you'll notice that there are 0 incidences. Now we're only looking at 5, but okay, 5 is a pretty good trend. There are 0 incidences of a spike in the banks starting to restrict credit and recession, right? 4 for 4 before this one. This will not be different. So recession, they can claim that we're not in one, but we're in one. And second quarter GDP is going to be negative. So anyway, at some point this year, they'll call it a recession. On the right-hand side, again, I'm not a statistician, I'm a PhD. That's a really high correlation, like extremely high correlation between PMI and credit. And that's exactly as you described. If you take credit away from operating companies, they stop operating.
Yusko points out the struggles faced by emerging markets and the struggle intensified by interest rate hikes. He believes that prolonged periods of risk-taking can lead to a market reckoning and describes the subsequent decline as swift and severe. Yusko says the financialization of markets in recent years will make this final downturn before the collapse worse than we've ever seen. What do you think about the latest interview with Mark Yusko? Is his prediction for Bitcoin, the crypto market, and the banking crisis accurate for the second half of 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.